We're seeing a sell-off across the globe. Stocks, bonds, commodities, all sparked by worries that the Federal Reserve may be withdrawing some stimulus. Ever since Fed Chair Ben Bernanke's economic testimony on May 22nd, the Nikkei, for example, has dropped 13%. Emerging markets are down 10% at least. The Euro Stoxx 50 is off 5%. The S&P 500 down over 2%. Got to ask yourself with this weirdness, is the market rally over for this year? I mean, and I want to go one step beyond, just put my own word in. You got 1% inflation, which is nothing. You've got 2% real growth, which is terrible. Heck, the money supply, there's no printing press. M2 is only growing by 4%. I don't see why the Fed should taper down or ease off or tighten up. I don't see anything like that going on. We need the liquidity. So we're bringing in Robert McTeer. He is the former head of the Dallas Federal Reserve. We also have Rebecca Patterson, Chief Investment Officer of Bessemer Trust, and Stephanie Link of the Street. No, it's just the Street. I keep making that mistake. And Chief Investment Officer, Co-Portfolio Manager of Jim Cramer's Charitable Trust. Ladies, as always, welcome. Talk to me just briefly about this, because we're really seeing it across the board. When commodities fall, when bond prices fall, when stock prices fall, pretty much in tandem, it looks like they are obsessing over an event. Is it, in fact, the Fed, or is there something I'm missing here?
Well, I don't necessarily think it's the Fed, at least in the last couple of days, because if you look at the economic data over the last couple of weeks, it's not been that good. And so I don't think that they're going to taper anytime soon, because, again, the data points haven't really supported. And as you said, inflation is really nowhere, and GDP is about 2%.
I don't even understand the speculation about tapering down. I don't even understand. I'm wrong. I mean, that's what everybody's talking about.
So Bernanke and other members of the Fed are jawboning the market, and I think that's because they want to keep it two-sided. In May, the aha moment for me was a Rwandan bond auction, 8 times oversubscribed. That is low interest rates pushing people. A Rwandan, it's hard to say that 5 times fast.
Whoa.
Right, exactly. Whoa. So Bernanke's saying, okay, we don't want people to take crazy risk. I mean, maybe it's not crazy risk to some, but I'd say to your average investor it is. So if we're not going to have them take crazy risk, we need to verbally intervene to make sure people think we could change.
That's a good idea.
And when they do intervene, that means the economy is strong enough, and they're going to be gradual. They're going to be flexible.
But there's no evidence.
That's right.
There's no evidence.
But I'm saying even when they do,
here's what bothers me. I want to get to Bob McTeer just in a second, but here's what bothers me. Bernanke said what he said. It's a two-sided market, but everybody interpreted that to mean he's going to tighten, okay? And now there is a consensus, not the meeting next week, but more than likely the meeting in September. That's right. The consensus. And the markets, in my humble opinion, are saying don't do it. The market, it's as though Bernanke has already tightened by threatening to tighten.
Well, look at the backup in rates.
And that is exactly right. That is exactly right. All right, let me bring in Robert McTeer, former president of the Dallas Federal Reserve Bank. All right, Bob McTeer, where do you come out? I want to know your opinion. You're a straight shooter. Should Ben Bernanke tighten up? Should he taper down his bond purchases?
Not real soon. He should do so maybe toward the end of the year. Taper down just a little bit. He needs to clarify that he's not going to do it real soon. This is crazy what's going on in the market.
Right. That's the great point. Has he, in a de facto way, maybe unwittingly, but has he miscommunicated so that the markets think either June or August or September, the Fed is going to cut back on their liquidity by buying fewer bonds? And therefore, Bob McTeer, is there already a de facto tightening going on, and these markets are registering their disapproval?
Yes, a de facto tightening has resulted, I think, from those minutes of of the last meeting where they referred to several individuals or participants. I think there's a little too much transparency there and too many people talking at cross purposes.
All right, let me just ask one more before I bring the ladies back in. You can all talk together. We've got 2% real growth, which is below everybody's par, all right? We've got 1% inflation, okay? Guys like me who months and months ago, or starting 2 years ago, said higher inflation, I was completely wrong, and I've made that mea culpa many times. So we got 1% inflation, 2% growth. The money supply, I don't mean the Fed's balance sheet. I know they put a lot of reserves in, but the reserves aren't circulating. So the M2 money supply, actually in the last 5-6 months, is down to only 4%. And velocity is falling, Bob McTeer. You know, if I believe that stuff totally, those data points, they're showing a deteriorating economy.
Yeah. Fed policy's only been easy in the Keynesian interest rate sense. If you look at the Milton Friedman view of money growth, it's actually been pretty tight.
Right. That's why stocks are selling off. That's why John Paulson's gold fund, you got to love this. He's a brilliant guy. I know that. Unfortunately, his gold fund is down 54% year to date. But gold goes down when they see monetary policy tightening up. And when inflation goes down and monetary policy tightens up, that is a real bad combination. And I think it's bad for stocks too, Stephanie.
Well, commodities, all the commodities other than oil have actually been in free fall, really. And it's the question of what happens to oil, by the way. Does it follow the rest of the commodity complex?
Answer. Where is it? I'm waiting for them to crack.
Well, it certainly could, but I think you have support from the Middle East, and I think there's some other things going on. It's a little bit different than some of these other commodities, but there's no inflation anywhere, and it's telling you that global demand is actually a lot slower than initially expected. We all thought in the beginning of the year that all this stimulus efforts from all of these central bankers around the world would lead to better than expected second half of the year growth.
Ain't happened.
Especially not after. And
There's
then you
not
look at the
single sign.
That's
a great point you make. There's not a single sign that that's happening. In fact, Rebecca, we cannot forget that the Federal Reserve tightened policy way back in 1937. That was the recession inside the Depression. That's so long ago, even I wasn't there to see it. But I don't want the Fed tightening now. I think it would be a calamity.
Well, what I'd like to know is, so the Fed has a meeting coming up this month.
Right.
Is it going to address the volatility in the bond market? Is it going to say anything about it? There is a press conference. It's an opportunity for Bernanke to say that this volatility in the market maybe is unwelcome. Try to calm things down somehow. That would be a huge relief to investors.
All right, good. Bob McTeer, can Bernanke get himself out of this communications corner?
Well, I'm afraid he needs to do what was just suggested, and it should be consistent with the release of the minutes at about the same time. So, yeah, he can, but there's just too much reporting going on about chatter within the meeting.
There's too many Reserve Bank presidents yapping publicly on a constant basis. Seriously. You're a former Federal Reserve president. I started my career at the Fed. I have an institutional bias in favor of the Fed. But this is a different Fed. This is not your father's Fed. These guys never shut their mouths. And I think that really gets the markets into a tizzy. What do you think about that, Stephanie? You're trading it. You're investing in it. What's this all about?
Oh, I mean, I think this is just a very tough time. A, you're up so much in the markets year to date. B, you've got kind of inconsistent economic data points here in the U.S. We were supposed to be the pillar of strength in the recovery. That's not happening. Europe is stabilizing, but there's still a lot of question marks. China is nowhere to be found. So there's all these uncertainties. Now you have the emerging markets also starting to kind of tumble. So there's a lot of uncertainty. People are locking in gains.
What are the emerging market stocks telling you? That is the global downturn. European. Do you know that ECB, they are way too tight.
Yes.
Their interest rate target is too high. Their money supply is falling. That's how dumb they are.
Right,
the ECB's money supply is falling.
The bigger picture issue here, all the things you said, Stephanie, I agree with, but I'd overlay on top of that is that we are facing uncharted waters. We are going to be pulling out of a quantitative easing policy. We've never lived through anything like this before. So to have some market uncertainty as we're trying to figure out what that's going to feel like, I think is normal. I'm still overweight stocks. I think this is going to resolve.
You're overweight stocks.
I'm still overweight modestly.
Across the board, the S&P 500. You like it?
Yes, I do. But I think it's going to be a choppy summer as the market continues to digest.
You say the rally this year is not over?
I don't think so.
All right, Stephanie, your take.
I like stocks. I like the U.S. I like housing. I like technology. I like the banks. I like what everybody said at the Morgan Stanley conference today in the financials. They were all talking about loan growth getting a little bit better, and the steepening of the yield curve makes them more profitable. So I like a healthy financial system, and I like that they're leaders. But I also think that there are going to be some opportunities in these emerging markets. I mean, these things have been hammered, and these material stocks have just been, they go down every day.
Can I just tell you, there's deflation in the air.
Yeah.
And the Central Bank of the United States is contributing to it. So is the Central Bank of Europe. And that's what these markets are telling us. There's deflation in the air. We cannot afford deflation because this has been such a lousy recovery to begin.
So it might help on the margin side, and it might help you on earnings as a result of that. So if you don't have the revenue growth, at least you have margins that can
are
stay.
Good. I grant you that. Margins are good. American businesses are good. In fact, American business should run the Federal Reserve. Anyway, Bob McTeer, former Dallas Fed head, thank you very much, sir. Stephanie Link, Rebecca Patterson, you two are going to come back later on. We've got some more controversy for you to discuss. But first up on